Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing an important weekly update about the economy and the investment market so you can understand our position. First off, the earnings coming out of the U.S. for the most part were fairly decent. These were on revised downward estimates for most companies, but generally speaking, most U.S. companies are doing decent. What we're looking for is forward guidance, and that's been a little bit mixed on some companies warning, some companies positive. These are things you're looking at towards the future. The stock market is typically a discount mechanism. One of the things that I want to stress is, as of last night, our intermediate market trend indicator did signal a buy in various asset equities around the world and asset categories. We do follow our investment strategy. Now, we've had a couple phone calls from clients wondering, Brian, I've noticed the market's risen quite a bit in the last couple weeks and we were holding a little bit more cash. When do you plan on putting that to work? The biggest thing that I can stress to all of our clients is investment strategy. And we do follow a disciplined investment strategy. We will be following our market trend indicators. And the reason we want to do that is simple. Our market trend indicators are designed to help protect from severe down markets. We're not going to sell at the top. We are not going to buy at the bottom. We're trying to escape a big chunk in the middle when a real recession hits us. And that's usually the average recession, as I've talked before, is down 40% in most equity markets or more. Our market trend indicators are designed really to alleviate that big 30% chunk in the middle typically. Okay, so we're not going to sell at the top. We are not going to buy at the bottom. There's really no indicator that I've ever seen that has worked that precise. Our indicators are really a risk management measure in severe down markets, and they did trigger a few months ago to start raising cash and get out of the equity markets. We follow those trend indicators. Those same trend indicators have a reverse course. It doesn't mean that we are fully clear out of the woods, but the market's trending in the right direction. We then take a look at our relative strength, our GTOP global tactical opportunities of the major sectors encompassed within our rankings, and we are now going to be adding assets from around the world back into our portfolio. The most important thing that I could stress to you is an investment strategy needs to be followed. Most investors, A, don't have an investment strategy, and B, won't follow an investment strategy more than 3 days, let alone 3 or 6 months, if it's not working immediately. Every investment strategy will have bouts of short-term underperformance. That's going to be the fact of investing. If you don't follow an investment strategy, then you're going to shoot from the hip, and what you are almost guaranteed then is substantial underperformance in almost any market, whether they're up or down. Emotional investing, knee-jerk reactions, and again I go back to emotional investing, is only going to get you into trouble, and in my opinion, and studies have shown, are only going to reduce your return. Your emotional attitude towards risk and your emotions towards the economy and stock market are not a good judgment where you should be. Following an investment strategy, as I've dictated, is more important than ever, and we do follow our strategy religiously. One of the things that I believe we saw yesterday is the EU come out and basically have some fairly constructive items about their banking situation in Europe and also about Greek debt. This kind of starts to pave the way that maybe they're actually serious about fixing some of their structural problems, and I hope that they continue on this path. China also came in yesterday late afternoon, basically said they were looking to buy some debt out of the Eurozone. Now they would be buying the higher quality paper from our sources, which still, again, supports a possible recovery of these markets. We are going to watch things closely. It doesn't mean that we won't make changes down the road, but as of today, we will be putting some more money to work. We're going to wait till the GDP numbers come out roughly this morning in about a half hour, and we will be putting money back to work. Again, I stress, every investment strategy will have its short-term flaws and sometimes underperformance. And if you are a 3 to 5 investor, those should be mitigated over time and you should be a very happy investor. But quarter to quarter, week by week, unfortunately, you're going to see some of this volatility within a portfolio. And the key is making sure your portfolio is constructed within your risk profile and your goals and objectives, which is what we do every single day at Resney Wealth Management for every one of our clients. But again, an investment strategy needs to be followed. Emotional decision making is not a great way to invest, and it's been proven that's a great way to underperform on the long term with your investment portfolio. If you do have questions about your portfolio, if you have any questions about the economy or the markets or what we're doing, feel free to give our office a call. We always love talking to our clients on a regular basis. And until Sunday's show, make sure you have yourself an extremely profitable week.